Joining us in our lunch break today. As Marlena mentioned, she's already gone through my presentation here, my introduction. And today we'll be going through several items here. How to apply for a loan, what types of loans, understanding how credit works, and in order to save you money. So let's go right into this. The first part of our presentation here is auto purchasing. What is an auto loan? A loan that you apply for a purchase, either a used or a new auto loan. The process is very similar to pretty much buying a home, except for slightly less lengthy to get approved. The types of auto loans that we're going to be talking about today, a little bit, very, very lightly, is going to be first-time buyer, how to get you pre-approved on a pre-approved loan, and an indirect loan. And throughout our presentation, we'll touch up a little bit on the indirect loan. That's pretty much, just to give a slight intro to it, is when you actually go to the dealer and they start up the process for you. Okay. First here, our first subject is credit. What is credit? Credit is money you borrow when paying for things, and usually credit is referred to as a loan. In this case, that's where FSU can come in for you. Typically, you sign a contract to pay back the money that you borrowed from us, along with interest. The key here, you are the borrower, the person that is borrowing this money, and we, FICU, comes in as a lender. Your financial institution either is lending you the credit, and they're sometimes called the financer. Okay. Continuing with this, we are talking about credit. Good credit is considered when you make your payments on time. And this way, when you make them on time, that means you're repaying your money back that you owe. Okay. Excuse me. If you have good credit, credit record, it will be easier for you to borrow money in the future. Now, having bad credit, it makes it a little bit tougher to borrow money. As you can see here, we have a graph from the 300 score mark through the 850. Kind of in between here, you see in the red, it becomes a little bit more difficult to get approved for some sort of credit. And the middle here, between the 600 and the 700, you see slightly higher interest rates. And in the 700s to the 850, I've seen some 850s and 900s. There's still some out there. You see you have a higher possibility of getting approved, or at least getting a better interest rate. Why build your credit? There's several instances where you will need to have the where credit comes into play. And in this case, in our first bullet, is going to be employment opportunities, the ability for the borrower to purchase large purchases, make large purchases, in this case, a house. And now auto loans are considered big purchases because of the price. Also, it'll help you save interest in the higher credit score that you have. It'll definitely help you get better interest. I'm sorry, my phone something was coming in. I put it on mute. Sorry. Let's see. What makes up your credit score? As you can see here in this graph, 10% consists of your new credit. 10%, another 10% consists of credit mix. It could be stores or whatnot. Length of history is how long you've had your credit history for, how long you've had payments here, 15%. Your payment history, as you can see, is 35% of your consists of your credit score, and how well you use your credit is another 30. So if you see, the vast majority of your credit score depends, 65% in whole is your payment history and how much you use it. Okay, so it is important everything's important, but ideally you want to make your payment on time, and how much percentage of that is being used. That right there is going to definitely help you when it comes to your credit score. How do you apply? Now you ask yourself, you want to make a decision, and how do you want to finance your car? We will always recommend getting yourself pre-approved. You want to try to finance through the dealership, through us. Ideally, you want to get pre-approved first at all times. Why? Because you're becoming more educated in the whole financing. And when you go to the dealership, at least you know where you're at as far as your credit score and your rate. Do you need a co-signer? If you're able to finance by yourself, that's awesome. If not, you want to try working your building your credit, and that way get approval on your own. If not, there's always, if you can find somebody that can definitely help you co-sign along with this debt together, so that way your rate's a little bit better. Okay, and there's options for you at some point, so that way we can definitely help you on that. the advantages of getting a pre-approval, which I always recommend 110% of the time, is that when, for example, a consumer like you want to apply for a secured loan, it's always backed up by something. In this case, we're talking an auto loan. So the auto loan is the item that's being backed up by your loan. Now it gives you confidence and upper hand. You know, like I mentioned previously, right now, is that if you know what your credit score is, you know what your rate is. When you walk into the dealership, you already have knowledge as far as what you're looking at. It tells you more or less what you can afford. You want to walk in there knowing that do you have an opportunity to get better, like what you want to know what is better for you, what rate the credit union or your bank is offering versus what the dealer's offering you. So you want to have that upper hand and say, you know what, if they tell you you qualify for 15%, say, no, my credit union is offering way less than that, or whatever the rate is, a pre-approval is definitely going to help you have an advantage of knowing where you're at. How do you apply? Now you apply for credit. There's a lot of different ways of applying, but you want to know at least the three C's of credit. Whether you're a good credit risk, if you ever pay back this loan. I always ask this to our members and say, you know what is it that you are looking for? This is something I always ask them. You want to know that do you have the capacity? In this case, are you able to pay this? How much are you able to pay? Now in the future, say, well, in the future I'll be making this much. You want to concentrate on what you're making today. So that way today you're able to say, okay, I'm able to afford this, then this is how much I pretty much feel that capacity part of it. Capital. How much do you have in your savings? Any other asset? Are you going to put a down payment? Are you going to finance 100%? Are you going to, you're going to put in a trade in? Those are the little things you want to definitely consider how much money you have ahead of time. The character. Now you want to, you also want to concentrate on the fact that, character says a lot. Do you pay your bills? So in this case, when the dealership asks you, like, if how much credit do you owe, you have an idea of what you have in your credit report. It's really, really important that you know this because that way you see what your chances are of getting approved. Okay. Now going into capacity, let's discuss this a little bit. Generally, a lender would like to see that you've held the same job for a period of time. Ideally, is a year. That's a bare minimum, only because that creates like a little bit more of a stability. A lender will compare to the amount you owe versus the amount you get receive in income. This is called the to income ratio. We call it as DTI. And this, how much can you afford? That's one of the key questions you want to ask yourself. Can I afford this $700 payment? Can I afford the $400? Can I afford the $1,200 payment? You definitely want to ask yourself that. I know you don't want to, the day after you buy something, get that buyer's remorse and say, oh, I shouldn't have done it, or I should have waited. So when you have this in mind way before, it's ideal because you kind of set yourself a goal and say, you know what, I can afford a $400, $50 payment, 500, 600, 300, 200. It's really hard getting a $200 payment nowadays, but definitely not, it's always a possibility. Capital, how much money do you have? Like I mentioned, you want to know how much savings you're going to put down. Do you own a house? Are you really going to, the payment that you have on your house versus the auto payment that you're looking for, is that going to be a good combination for you? How much you get paid, anything else besides in debt, as far as you can put down, that you have. You want to know this when you're looking into buying a car. It's really, really important because that way, when you're looking into buy, it's gonna make a big difference. Saying, you know what, I have $2,000 down, I have 1,000, I have 5,000. I have a trading, and I have to consider how much I'm paying in my house and how much I'm paying in my car. So when that comes into play a lot. Now your character, having a good credit history is definitely a definition of your character. How a lender looks at it from a standpoint of he's paid his debt. You really look at the credit. I don't see you face to face, so I will not judge you from that. I will judge you as far as your paperwork and say, you know what, this person has paid their credit, has paid their payments on a credit. I've never had a credit account, then it makes it a little bit difficult because I always say I'd rather have no credit than bad credit, but having good credit, it shows the lender that you can borrow responsibly. Some lenders let you prove without even having a credit history. We do have a program like that too, where if you've never have a credit card at all or any no auto payment, then we give you that opportunity or try to give you that opportunity that prove yourself with time. They might ask you for proof if you pay rent, utilities, anything. Nowadays, utilities are being reported on the credit report, so that's also a good thing because it shows how well you've paid those items as well. So character is also very, very important. Now, credit terms you want to be familiar with at the time of auto buying. They can be very confusing. As lenders, we use a lot of acronyms and a lot of changes and fees and rates and whatnots. But the truth in lending law requires our lenders to state the charges in using your contract. You want, and the lenders have to disclose to you and dealers as well. So you want to be aware of how much amount you're financing, your APR, your finance charge, and your total payments. You want to read this through. Ideally, you want to look through your contract very clearly and ask questions. I always say it doesn't hurt to ask. They want to rush you through this? No. You want to ask, what is this? And what is this? And what is this? What is this? You want to ask questions at all times. Now, credit report is, I always say it's the report card of all of us consumers, right? Lenders, we use the credit report information 100% of the time. You have, as a consumer, have the right to, we report to these credit agencies as the lender. Lenders always report to these. They have to by law. These are the numbers where I suggest you write these down. For you, Experian, Equifax, and TransUnion are three major bureaus in the United States. Most of the lenders in the western part of it use Experian, and you as a consumer have the right to always yearly check your credit report for free. The only thing that's not going to provide to you is a score. So you're going here, you identify yourself. I suggest this 100% of the time that you want to go in here and view your credit and see how it is even before you're even shopping. So that way, if anything comes up, any changes to the credit report is not immediate. Okay. If you want to make any change, if you want to make a change into it, you have to do it time. So it takes a little bit. So I would definitely write this down. Annualcreditreport.com. This is your right to go in there and view your credit for free again. And it's a very, very good tool that is provided to you, that you can go in there and check it, dispute something you don't like, especially if there's double names or somebody has a different name. If you get kind of information gets mixed all the time. So when you're auto shopping, this can definitely be a nightmare for you because if you're shopping around and stuff comes up in your credit report, you're like, well, that's not mine, that's not mine, that's not mine. The lender can't remove it. Okay, that one lender. So you have to you have to submit a formal dispute. So you want to ask yourself, have you ever been denied credit? Have you filed bankruptcy? Have you made late payments? Any property repossessed or foreclosed? If you answer yes to any of these questions, you will have a little bit more difficulty getting approved. It's never a definite no, unless, of course, everybody's situation is different. So depending on the circumstances, the lender might be willing to approve you on a loan request. That's something that definitely you have to talk to the loan officer at the time and say, okay, feel free to just ask, what is there? You are entitled to a copy of credit report when a credit report is pulled. So you want to look into say, why wasn't I approved? And we have to tell you, the lender has to tell you why and what reason it took to give you that answer. Okay, so and say, you know what, this is why we didn't approve you. Now, if you work on this and if you work on this, ideally that's, just free advice and say, you know what, I didn't approve you because this stuff has came up and under your name. So maybe that's not yours and you want to do something about it and clarify. Now the lender takes, if you build a rapport with this lender and say, you know what, I've paid you X amount of loans in the past and some of this just came up, then definitely at some point the lender can work with you on it. Things you want to avoid with auto shopping. I make a lot of facial expressions. So I would say, you need to have a poker face. Poker face 100% of the time when you go to buying. Don't appear enthusiastic. Say, yeah, this is the car I want. I love it. I definitely hold a face and say, well, this is not what I'm looking for. What price can you give me? Poker face works all the time. Why? Because they know you want it. So the minute they know you want it, it's like, oh my God, this is it. We got them, right? You never want to buy a car in a hurry. Don't go in there. You know what? I need a car. I need it. I need it. I need it. I definitely will not walk in there in a hurry. Um, there's times that ideally, yes, the work, it's kind of known industry wide. You want to buy maybe on a holiday, or don't go in there 9 o'clock. They don't like that very much. But ideally nowadays there's so many ways. There's as far as online, over the phone. Usually online is works the best because you're not spending hours there. Avoid being switched between from a lease without research, doing your research and options. Okay. People are not necessarily a fan of lease in the sense of the way it works. Some people, it does work for certain people, and ideally you want to do the research. I always ask these type of questions. I say, you know what? Do you trade in your cars every 2 years? Do you like to trade in? Do you keep your car? Do you not keep your car? Do you drive it on mileage? You don't. Those are the questions you want to ask yourself. Leases are very good for certain type of buyer. Okay. And then if I know a lot of people that love to keep their cars and do not like to switch cars every 2 years. So at least may not be the best. But then if that is the case, do not trade in your car without knowing what the value is in advance. You got to trade in. You want to pull the value on it. You want to know what it's worth before you walk in there, because they'll pull the value for you, but you want to give yourself the features that your car has. Okay. They may put generic value and they'll turn around and say, well, I don't know if this has that. And then you're like, no, it has these options. I always recommend whenever if you buy a new car, there's a window sticker that's on the window, and you want to save that at all times. At all times, you want to save that, because new cars will come with certain features that are not going to come out in the history of the car. And you, like, if it's a truck and it has a special package and a special stereo, or all cars nowadays have so many new features and different features that it's really hard to keep track, and it's not always going to come up. Okay, so for insurance purposes and for the fact that you're buying it and you're trading it at some point, you want to keep that beautiful window sticker. Okay. Now dealership extras, and that's something that dealers love to sell, because it's actually really good products. I'm not gonna lie, and I love these guys too. So, but let's see, I work with them every day, and I see this every day. When you're working closely with the finance department at the dealership, there you will be offered these once you've done all the negotiation up front with people in the front and your salesman. You've agreed on a price, and you're ready to sign. These come up. These are not going to come up right at the beginning. Once you're sitting there, right, you've been there a few hours, and or hopefully not, and you've already negotiated and you're in love with the car, they're going to try to sell you the extended warranty,
Robert,
maintenance plan,
I-
maintenance
so I'm doing
plans. And I don't know, Marlena, do we have a question, or I kind of heard something, but if you have a question, let me know. Okay, so we have extended warranty, maintenance plans, gap insurance, and then interior and exterior protection plans. Oftentimes, these are definitely extras, and at some point they're overpriced. You didn't hear me say that, but yes, these can be bought at a cost for within a credit union. I know that we don't always question it, but you want to question. Extended warranty can only be bought when you buy. I'm sorry, gap can only be bought when you buy the car. Okay, so you can buy it with the dealership, but you have the option with the credit union. So at the time you buy it with the dealership, you can buy it with them, and if you were to refinance, gap automatically cancels from the one lender to another. Okay, so that's the only product you're gonna have to buy at some point if you've refinanced. Every time you refinance, gap cancels. Okay, but you have the option of calling your previous gap contract company and canceling it, and at some point they can give you a prorated refund. Okay, all of these, I want to say most of these extras can be cancelable, can be canceled, and you can get a prorated amount back. Extended warranty, the dealership most of the time will try to sell you on it, which is an awesome coverage, because your manufacturer can only cover 36 months or 3 years. So if you finance more than 3 years, I definitely recommend the extended warranty, because things start breaking down after a period of time, maybe 3-year mark. 4-year mark. And if you don't have the manufacturer warranty at that point, then that's where the extended warranty comes in. So extended warranties are good, is a good option, but definitely is I would research the price. In this case, credit unions do offer it with a very significant price, less price than what the dealership is selling. Maintenance plans, we don't sell maintenance plans, but they do, and that is also a very good option. So I always ask questions, always, always, always. So I mean, when it comes down to the price as well. So what price, if they're selling to for $3,000 and you're able to buy it for half of that, then there you go. There's your answer. I would definitely rather pay half of what they're selling it to me and compare. It's always good to compare. Again, that's why you don't want to buy in a hurry. You want to have that time to be able to compare the stuff you're buying for. Okay. Now don't forget about insurance. How many times we don't budget for insurance. So you're going to want to buy the car you can afford, and don't overlook insurance. Now, especially nowadays, is more and more I've seen insurances be a little bit more expensive than what it used to be last year or whatnot. But I've seen that a little bit of an increase. It's very important to get a quote for your insurance company when you're out buying a car, because the make and model definitely make a huge difference. You buying from a Corvette to any other, like I just said Corvette, but because it's a sports car, but or high end vehicle versus not so high end vehicle. So it's going to make a big difference. So you want to take that payment in consideration. Say, oh, well, my coverage on this one for coverage is, it's this much. And as a lender, any lender will require you to have insurance. And we'll go right into that right now. Remember the following types of coverages when shopping for a car are these: liability, collision, comprehensive, comp and collision. Liability is what the state of California requires, okay, to have insurance. Now, this covers bodily injury, damage to the property of others. If you find liable for an accident, make sure you carry adequate limits. The minimum coverage required by the state is often too low. You're responsible for whatever the insurance company does not pay. Okay, so that's the liability part of it that the state in our state of California requires. Now, comp and collision is what covers the vehicle. Okay, so I always say this. I always say, God forbid you were to hurt somebody, liability, that's when it comes into play, and comp and collision is where the auto may be required. We put a maybe there, but it is required for usually on a lender that covers the damage of the vehicle minus the deductible. Comprehension is most again required by a lender, covers the miscellaneous damage to your vehicle minus deductible. For example, if you hit a cow or your car is stolen. Okay, so we don't want to hurt a cow, but stuff happens. So in this case, the lender will require the liability, or the comp and collision, and the state of California requires the liability. So you got to have all three. Okay. There is a minimum required, and the highest you can go in our cases, like it could be between 500 and 1,000 deductible. So you want to take consideration of this, and insurance companies, they're all over price range. So you want to take in consideration how much everything comes into play from your age, from your record, your driving record, the car, everything. So you want to do your research and call your insurance and say, how much is it going to cost me if I buy this particular vehicle versus this particular? And they definitely would. Oh, you can do this online as well. Okay, so this is what you want to budget for. These come into play at all times, not necessarily from the lender standpoint, but from the consumer standpoint. You want to consider what your car payment's going to be, what your gas is going to be, oil changes, maintenance, and insurance. So your insurance is a big portion here, and maintenance, of course, if you got a higher end vehicle, whatnot. I mean, usually they're higher. The maintenance is a lot higher. Same thing with the oil changes, and gas is not so expensive nowadays. But it depends on the vehicle you're driving. Okay, if I'm driving a Honda Civic versus V8, bigger vehicle, Suburban, then it's going to make a big, big difference. And the car payment as well. Okay, because nowadays cars are very, very expensive. I always ask myself, oh my God, cars are so expensive now. But unfortunately, that's how it is. So everything you definitely want to consider, not just a car payment, but in the used autos usually do not depreciate so fast as the new cars. Okay, 1-year-old vehicles are going to depreciate. I always say as soon as they leave the lot. As soon as they leave, you're already looking at 20-30% depreciation. But sometimes if you look at a little bit of a used car and say, you know what, it's got 20,000 miles into it versus 0 miles. Of course, we all love the new car smell. It's awesome. That feeling is pretty neat. But you're looking at something that maybe with 20,000 miles into it, you're going to save a little bit of more money versus driving it off the lot brand new. Used cars usually have extended warranties. And so, I mean, it doesn't hurt to look into that option there. And all vehicles and the window sticker have the VIN number. So you have access to that. I would definitely go online, look at that VIN, look at that value, and consider the new and the used. And sometimes, these cars that have 1,000, 5,000 miles, they're considered used, but within that mileage, you have really good lending options at that point. Now, refinancing. Auto refinancing is a very, very, very attractive market now. Why? Because it's like, where can I refinance? I like to mention, I don't know if it's in my presentation, I don't recall if it's in my presentation, but a really big myth out there that consumers are told, and this is, I can tell you, anybody who walks into a dealership will be told you cannot refinance in no less than 6 months. You need to wait a year to refinance. Ideally, you can refinance at any given time. What I do suggest and recommend is that you do it as soon as you get your registration. Why? Because your documentation has been finalized with the state, the DMV, and that's a very good sign. You know what? You have your registration, it says your name on it, says your institution on it. Then pretty much that transaction has been finalized with the state of California and the dealership and yourself. So that right there is your golden ticket to refinance and start looking what is best for you. Now you should consider refinancing if, for example, if your credit score was low at the time you bought your car and you got, unfortunately a high interest rate, then definitely you start looking for options. If your credit score has changed, I would definitely recommend that you don't, like, again, your key ticket is you have your registration with you. You want to lower your monthly payment, and that's definitely going to help you. Like interest rates have dropped, or they're dropping. You want to take a look at your original loan and say, okay, at that time I had a 10%, now I can get a 6. You know what? If you save, I always tell this to our members, if well, it's only $10, and I say, well, some 72 months, that's $720 I can save you automatically a month, not counting on the interest that you'll be saving. So if you're paying $600, that saving you 700, that's like giving you a free payment. You think about it that way. So refinancing can definitely save you money, and it doesn't cost you much. It doesn't cost you. It's just really just doing the transaction. So I would definitely consider that option. If you can do it, refinance. I know, well, I mean, we have several programs that definitely um, our refinancing is one of our strongest programs there that we look into. We check in our website every single time we can. So that way you can look for what we have on on our website. It's usually pretty good. Here, touching it, why refinance? The longer term decreases your monthly payment, but excuse me, lower interest rates. For example, here in our example, on the 3 little red cars here, you have the original loan, you have the refinance loan, and another refinance loan. For example, you started off your loan with 50,000. Okay, we gave you, you got a 72-month loan at 8%. Your payment's 876.52. So when you pay it off, the total cost of it is going to be 63,108.81. I know we don't like looking at that number. It's it's a little ugly. But nonetheless, you refinanced it and say, you know what? I came to this place called FICU, and they gave me, I ended up getting a 5% rate. Okay. I'm just going to say for the sake of the example. And now my new monthly payment is 805.40. Right there, I can see a difference in payment of approximately $71.12. $71 is saving a lot. So if you are at the time of finishing and paying off your loan, you're going to end up paying $57,988.35. That is a big savings. That's almost $6,000 or $5,000, somewhere in that figure. So that was right apples to apples. So if you say, you know what, I'm going to refinance it for a little bit longer. I do want a more of a payment. I'm okay. I want, that's just apples to apples. Okay, so if you want to say, you know what, I'm going to extend it out a little bit, I can do that. Yes, you can do that at time of refinancing. If there's some rules that apply to it, but most of the time you can. And so you decide to do it 84 months. Okay, I'm going to extend out a little bit. I'm going to get that same 5%. And now your monthly payment is going to be 706.84. If you do a comparison here already from when you started till now, your payment is a lot lower. It's like $170 difference, approximately 169 something automatically from your first loan, original loan. And look at the cost that you've paid total, 59,373.94. That is almost $4,000 or 3,700, somewhere in there, um, of savings. If you ask me $4,000 and if you're $700 payment, you're looking at three couple payments there, maybe like three payments. So if I told you I can refinance your loan and give you three free payments, there you go. You know, you just save yourself a couple $1,000s in just refinancing with a very minimal cost, which is we don't usually to refinance, there's no cost to you. This is not compared to like a house when you refinance a house and you have to pay all these fees. Okay. So in this case, the auto, it comes just really doing the process, just talking to one of our processors or loan officers to say, you know what, this is something I need to do now because a day, this interest is being accumulated daily. So you're paying interest on a daily basis. So the sooner you do it, the faster and the more you're going to start saving money. So you know what, we've come to the end of our presentation. I don't know if we have any questions out there. Just seems like I went through this really, really, really quick. Um, I don't know, Marlena, if there's any questions.
I don't see any in the chat, but we'll give them another minute or two to see if there's any questions from anyone attending.
Okay.
Okay. And then, Dulce, if you go to the next slide, we will have a survey there for those of you that attended the webinar. If you could go ahead and scan that and give Dulce your kudos or any comments or feedbacks on the webinar. We'd love to read those and take them into consideration for the next webinar. Something else is that we will be having a webinar here in the next couple of months, and then we may have one in our branches too. So we may be adding some, so just go ahead and keep looking out on the website and we'll have those updated for you. This webinar will also, it's been recorded, so we'll have that available on the website if you wanted to go back to a specific portion of it, maybe kind of replay some section that Dulce discussed, maybe on the auto refinancing or maybe the credit section. And we're always here. You can always go to the website, ficu.com, or step into the branch.
Thank you so much, yes.
All right, well, if there's no other questions, we'll go ahead and end this webinar. Thank you for everyone that attended. Dulce, thank you for sharing your knowledge with the audience here, and we'll be with you shortly.
All right, thank you.
Thank you all. Have a good rest of your day.
You too. Bye-bye.
Bye-bye.